Britain's pound sterling has reached an all-time low against the US dollar as investors digest the tax-cutting package put forward by Liz Truss's new government. Our correspondent Kimberly Lim is here with more. Kimberly.
Well, thank you, Andrew. Well, it's certainly been a bit of a bloodbath of a day for the British pound. Sterling dropped to an all-time low against the dollar in the Asian markets, down nearly 5% to just over $1 there. Now, that's its lowest level, basically ever since decimalisation back in 1971. Now, to put this in context, the pound has been under pressure against the dollar for a number of weeks in the run-up to Friday's mini-budget, partly down to the wider strength of the dollar, but it took a beating straight after the budget announcement, dropping a whopping 3%. Now, bottom line here is that the market is not liking what it's hearing from the government. Now, Britain's finance minister revealed the biggest tax cuts for 50 years in his not-so-mini budget, a package that will be paid for through huge government borrowing. And we're talking about big cuts here to income tax, stamp duty and the scrapping of planned business taxes. Now, this is a $48 billion debt finance package that we're looking at and means a huge increase in borrowing costs to fund it, which is what's spooking the markets. Now, the pound saw some recovery after its big drop earlier, but the currency's outlook is shaky. Now, the Bank of England released a statement a short while ago saying it is monitoring the financial markets very closely and won't hesitate to act when it meets next in November. Now, joining me now for more on this is Victoria Schola, who's Head of Investment over at Interactive Investor. Now, Victoria, thanks for joining us. We heard a short while ago from the Bank of England. It says it's monitoring the financial markets closely, but no emergency rate hike. What do you make of that statement?
Yeah, it's really interesting if we look at the market reaction for the pound, because like you said, we had that huge slump overnight and then it paired some of those losses. But now it's down by almost 2% again. So the Bank of England's statement, which clearly was designed to try and stem the decline for the pound, has done the exact opposite. And that's essentially because it's held off from suggesting that it is planning an emergency rate hike. There was no emergency liftoff today, and it said that it's going to wait until its next meeting to carry out any further action. So presumably the next rate hike is going to come on the 3rd of November, because remember, it was only just last week that we had the last meeting when the Bank of England raised rates by 0.5 percentage point, which, according to some economists and analysts, was a bit more hesitant than perhaps the market was expecting. It was the day after the Fed, which raised rates by 0.75%. We were looking at the Bank of England potentially following suit. And now that we've got the mini budget that's seen the pound plunge on the back of it because of the borrowing, increased borrowing that you pointed to just before, it does feel as though that was a bit too modest. And now the fact that the Bank of England is ruling out this emergency rate hike, that's putting pressure on the pound again.
So, Victoria, you know, in light of everything that's happened in the past sort of 72 hours, do you think we're likely to see a more extreme rate hike then once the central bank meets again in November?
I think we will. I think the Bank of England has no choice, because the weakness in the pound is in itself very inflationary, because it means that our imports are becoming a lot more expensive if we're importing goods from the United States, where the dollar has risen versus the pound, or Europe, where the euro has also rallied against the weakened pound. Those imports are a lot more expensive, raising price levels in our economy. And the Bank of England's mandate is to try to keep price levels around 2%. Remember that inflation is at about 10% now, around double digits. So it's got a real conundrum on its hands. It needs to bring price levels back down closer to target by lifting the pound first and foremost. And secondly, it needs to try and ease off what's going on in terms of the economy and not inadvertently cause a recession.
Now, Victoria, I mean, it's an incredible drop that we saw in sterling against the dollar earlier. Obviously, a big part of it was reaction to the mini-budget, but there's more factors at play there, isn't there?
Yeah, we've seen that the pound is actually down by about 20% against the US dollar this year. So year to date, a lot of that has been driven by the strength in the US dollar. We know that investors have been moving towards the greenback as they looked for safe haven assets to shield themselves from the equity market volatility. On top of that, we've seen a quick succession of rate hikes from the Federal Reserve stateside, which also has lifted demand for the greenback. So it's not just a weakened pound story. It's also been under pressure because of strength of the US dollar. But we saw those losses accelerate after Friday, particularly in the Asian session last night amid softer volumes than this morning once European traders had woken up. So there's sort of two sides of the ledger. There's upward pressure on the US dollar, and now there are additional concerns about the outlook for the UK economy, as well as its investment case, that have also put downside pressure on the pound.
Victoria, many thanks for joining us. We will leave it there for now.